Good evening, everyone. I guess when it turns dark out at 4:30 in the winter, I think of 5 o'clock as being evening time. So hope this finds everybody on the call well and having celebrated a wonderful Thanksgiving weekend. And thank you for joining us, taking time out of your schedules to do that. I want to just say to anybody on the call that has investments with Prudential, whether that's the funds or the annuities or life insurance, just know that we greatly appreciate that vote of confidence. And if there's anybody else who's interested in learning more about the tax-deferred nature of what Prudential can do on the annuity side, not just with the Jennison types of funds, but the multi-manager approach with the big house names that you all are familiar with, the BlackRocks, the American funds, the Fidelities, the T. Rowe Prices, all under one umbrella, backed by Prudential, by all means. And by the way, that's what the sensitivity to lower fees through advisory, as well as through annuities. But if anybody has any particular interest in learning more about ways to complement the portfolios that you have, reach out to Dom, reach out to Michael, and I can work closely with them to talk through what may or may not be appropriate for what you all are holding right now. But tonight is not about anything Prudential other than listening to Dr. Quincy's comments, who's with Prudential here tonight, being December 1st. I exhale, take a nice pause when I say that date, because I can't believe we're 8.5 months into this crazy pandemic time period, and we're that much closer to saying good riddance to 2020. But I think you're going to hear some really optimistic, more positive comments from Dr. Krosby tonight in regards to wrapping up the year and looking out towards 2021. So we're looking forward to that. Before I do a formal introduction to Quincy, though, let me just say something that you guys all on this call know, and I can see how you interact with Dom and Michael. But, in my position as the regional vice president on the annuities, working with literally 1,000, I could, financial advisors all across Long Island and metropolitan New York marketplace, you guys have in Dom and Michael two really solid professionals. The fact that they put these calls together and seek out the top talent that they do to keep you informed above and beyond what they're doing. I know you already know this. I know you count them among your blessings, but you've got two great professionals, and besides the fact, two good human beings. So with that, let me introduce another true professional, another good peep, so to speak, and that's Quincy on the call with us. So allow me to do a formal introduction here, and we probably should say that if we could have everybody mute their lines, that might be helpful. And then, of course, we'll make time for some questions and answers after Quincy's prepared remarks, if that works for everyone. But by way of Quincy's background, Dr. Quincy Krosby is Prudential Financial's Chief Market Strategist, and in this capacity, she provides a perspective on the global macroeconomic environment and the financial markets. Previously, Quincy was the Chief Investment Strategist at The Hartford and Global Investment Strategist at Deutsche Bank Asset Management. She also held global markets positions at Credit Suisse and Barings. And before coming to Wall Street, Quincy Krosby was a U.S. diplomat serving in Washington and United States embassies abroad, including a posting as energy attaché at the U.S. Embassy in London. In addition to numerous assignments at the U.S. Department of State, she served as Assistant Secretary of Commerce and represented the United States to the International Monetary Fund, positions which do require confirmation by the U.S. Senate. Quincy studied at the London School of Economics, where she earned her master's and doctoral degrees, and she is frequently quoted in the financial press. And as you heard earlier talking to Dom, she appears often on business television. So Quincy, thanks a lot for joining us here tonight.
Oh, thank you, Carrie. And Michael and Dom, thanks so much for asking me back. And thank you, folks, for spending some time with us tonight. It is pretty dark out. I want to go over the backdrop for the market, because one of the things that always comes up is when people say, Quincy, how can the market be up so much when we have COVID headlines, hospitalizations are up, there are about 10 million people still without a job, and the stock market is making new highs? How is that possible? Well, clearly it is possible because it's happening, but you get the point. Where what's going on? How could the market be so ahead of where the economy is? And the reason for that is that they're not the same, which seems to be fairly obvious. Sometimes it actually works out that it seems like they're the same, but the market tends to move quicker, both up, by the way, and down. So that's important. It's not just always up, sometimes down, because the market will pick up various and seemingly disparate data releases and come to a conclusion about where the market is headed. And that's important. It's important because to know that they're not the same and not to be, how do I say this, scared when you see the headlines and then you see the Dow making a leap across 30,000, and then the same week the S&P 500 a new high, the NASDAQ a new high, and again, food lines around the United States. So the other thing I want to point out, which I think is very important, is that the market will change course very, very quickly. And when I talk about the market, I want to be clear about this. 40 to 50, even 60% of daily market volume is not a person. It is an algorithm. It's high-frequency trading. It doesn't mean that people, human beings, portfolio managers, and advisors don't get involved in the market, but the instinctive reaction when a headline hits, and it's not just a headline, by the way, these algorithms can pick up comments from the Federal Reserve Chairman, Jerome Powell, comments from CEOs when they're speaking, and then move the market in one direction or another. And it happens seemingly automatically. Having started on a trading floor on Wall Street, we didn't have this. We had just started to have what we call heavy trading that would come in as packages, and that would move the market. We thought that was, oh my gosh, so dramatic. It's nothing compared with what we have now. But one of the things that I always learned from my bosses in the early years was you trade and invest in the market you have, not the one you want. So we just deal with it. But the other thing I want to add is that a change in the market can come by a comment from the Federal Reserve. Very often it is the Fed, and we're going to point this out because I want to go over where we are now and where I think we're headed. But the bottom of the market was March 23rd. We don't think we're headed back there. If March 23rd holds as the low point in the market, it will have been the shortest bear market actually in history, because it didn't last very long. But what the Fed did was actually amazing. And by the way, other central banks were working in their respective countries, but the Fed, coupled with the administration and the Treasury Department, was able to move into every nook and cranny in the market to provide liquidity and to backstop the credit markets. Credit markets are crucial. Those are, you may have high yield bonds, formerly known as junk bonds. You may have investment grade bonds. You may be in money market funds and also commercial paper, the money that pays bills for small business owners and also large corporations to some degree. They were frozen, absolutely frozen. And that means there was no liquidity in the market. The Fed came in and said, we will backstop all of this. We will be the buyer of last resort. And what that did was give comfort to investors that they didn't have to worry that the Fed would be there. And again, we also had the money coming in called the stimulus or relief package that also helped to underpin the market and give a sense that the bridge from where we were in March to the other side of this pandemic, which no one knew it would take so long, that there would be a cushion underneath. And that's exactly what it was. And so from that day on, investors and traders basically looked at what works, what does work. And everyone on this call knows what worked. It was the large tech names. Why? Because they have strong balance sheets, because their products, we all know what they are, whether it's the phone I'm using, whether it's the software, whether it is Netflix or Apple or Amazon delivering to your house or Microsoft. We know that they are the best of breed. They have strong balance sheets. They have recurring revenues. And here's this. They are going to be important during the pandemic and after the pandemic. And then, by the way, we saw the market look for other things to invest in. And it may not sound exciting. Certainly they don't have the kind of market capitalization as those megatech names, but they were Clorox for obvious reasons, the other Procter & Gamble products, Hormel, which, by the way, has spam, which I don't understand how it's so popular, but it is. And Hershey chocolates did very well because we were eating like crazy, 6.5 times more than last year, and a number of other what we call soup and cereals names. That's it. Take a look at the difference between those two groups. However, very soon after those moves in the market, you started to see healthcare, particularly biotech. The more we heard about companies coming up with therapeutics and then moving towards a vaccine development, you started to see healthcare start to come up too. So it wasn't just those two ends of the barbell. We started to see healthcare. And then, and this is what's interesting, as the first wave of COVID subsided, and remember, a lot of stimulus coming from the European Central Bank, both from governments to their own respective countries, the United States, and all over the world. Central banks active, and again, their respective countries also pumping money into the system. We started to see the beginning of the healing of the global economy. Now, I just say this without being political. China actually started first. We started to see the economic data pick up. And you may say to me, Quincy, how could you pay attention to anything that China says? Well, you'd be correct, because what we always do is we try to confirm whatever the data actually are. And what I saw was that I saw Japanese exports to China up, German exports to China up, South Korean exports to China up, all suggesting that demand in China was picking up. And why was it picking up? Because the economy was starting to heal. So those were all very important. And the data in the U.S. picking up too, whether it was the housing market. And when I talk about the housing market, I want to be clear about something. It isn't just about housing. Whenever we look at the data that tell you about housing, it's extremely important because it has ramifications for other parts of the economy. To give you an example, you need consumer confidence, right? You have to be confident to go and buy a house. You need to be able to access money from the bank. So it has to be that credit is available. And then interest rates have to be low, especially in periods like this, and interest rates have been very low. So all of that reflects not just the housing market, but the overall view of the economy. And as we came into this next COVID wave in Europe, here in the U.S., we came in strong. So that's very good, because it means that if this COVID wave hits and dents the economy, and how would it happen? It'll happen with more people being let go. Thursday morning at 8:30 has become an extremely important time for the market because of the data releases. What we find out is what we call initial unemployment claims. For 2 weeks now, obviously in a row, we have seen initial unemployment claims climb. Continuing claims, which is very important, has actually come down. Good news, but the leveling off is actually starting to slow. So this Thursday is going to be important because we expect that because of this COVID wave, we may see more layoffs. And then on Friday, will be very important for the market because it's going to be when we get the payroll data. How many jobs have we created? Again, the fact that we came into this COVID wave very strong is helpful because what we want to know is how much is the economy going to be hurt? And are we going to have extra money from the government to help those who don't have any money? They've lost their jobs. And, these are the people in the service sector. Any bar that shuts down, any restaurant where we live shuts down. Those folks are, they're out. There's nothing that they can do. So these are all the questions right now. But let me point this out, and this is about the market itself. The market knows, the people who invest know that we're going to get through this because they know that the most important stimulus of all, the most important, more important than stimulus from the government, more important than the election, is the vaccine. So let me go over how this works. The vaccine, we've got two right now that are working with the Federal Drug Administration. They're asking for emergency use authorization. It is Pfizer with its German biotech partner BioNTech, and it is also Moderna, an American company, Moderna. They have asked the Federal Drug Administration to look over their data and then give them the authorization to go out immediately. When I say immediately, I mean immediately, to go out and start distributing the vials of vaccine. You probably already read about Pfizer. Pfizer is not working with the U.S. government per se in terms of distribution. They have their own distribution play, and that involves United Airlines, United Airline cargoes. They have set up distribution sites in the U.S. and over in Europe. Remember, the thing about Pfizer and BioNTech is that it requires huge commitment. When I say deep freeze, I mean deep freeze. It's very hard to even imagine who can actually come up with it. And here's something really interesting that I found. And by the way, there are people who are asking, okay, what company is doing this? I'll go over that in a minute, and including with Moderna, because people are investing in all of this. But in their cargo plane, the Federal Aviation Agency was asked by Pfizer for permission to have more dry ice, 5 times the amount that is usually allowed on that cargo plane. Because that's how much ice they need to keep the vaccine vials safe and effective. Moderna doesn't need that. Moderna just needs a kind of a refrigerator, quite frankly. But one of those little bags that you have, when you go on a trip. But they both need 2 doses, so you'll be inoculated twice. Now, who's going to be inoculated? Well, the initial idea is, and it's going to have an effect on the market. It is going to be people in the front line, anybody in the medical community. Those will be the first ones, and then you're going to see folks in the nursing homes and the workers in the nursing homes, perhaps school teachers. So you get the point. They also are talking about the elderly and so on. But the point here is, it's emergency usage first. And then the Federal Drug Administration will have panels to go over all of the information from Moderna and Pfizer to give general authorization for the rest of the population. That is going to take some time. However, Johnson & Johnson is also moving towards they're in phase 3 trials. That is the last trial you will have. But we know that they're well along in the phase 3 trials, and they will be asking for emergency usage also. There are about 90 companies right now, or entities, in the development for the vaccine and in clinical trials. There's another one, which is AstraZeneca, working in conjunction with Oxford University. They have moved along and they're being granted authorization. The British are really going to be receiving those jabs. Pfizer, by the way, will probably be working in the UK very, very quickly too. AstraZeneca, though, there's a company in the U.S. They are analysts, came out over the weekend, one of their main analysts, and said, we don't trust their data. They will never be granted permission in the U.S. And their share price actually in the overnight trading futures market came down. But they are going to be increasing their phase 3 trial just in order, obviously, to receive authorization here in the U.S. So again, this move towards a vaccine is crucial. Now, what is the market going to look at? Because remember, the market looks ahead. So whenever we had this information from these companies, the market moved and the market broadened out. We call that breadth, B-R-E-A-D-T-H, thrust, T-H-R-U-S-T. And I'll hear a lot of people say it's a rotation. No, it's not a rotation. It's a broadening out. A rotation would be, I get rid of my technology stocks because after all, what do I need them now? And I'll take that money and I'll go into the small and mid-cap stocks. I'll go into the cruise lines. I'll go into American Airlines, United Airlines, and so on. That would be a rotation. But this is, money is still going into technology. Perhaps we need to have the valuations, they don't need to be as expensive because they can coexist with an economy that is normalizing, because that is what this is all about. So how will the distribution affect the market? Because if you would argue that the market is kind of frothy right now, it is. We call it, we're overbought. You know, people think this business is about science. I can assure you, having worked on a trading floor, worked in derivatives, and even on an international portfolio, I would have to say it is as much art form as it is science. But you know when it's overbought, you know when it's frothy, and you know when it has to kind of pull back. Just take a breather and pull back. So that's what we expect, to be some volatility, pockets of volatility, until we do get to the other side of the pandemic. But that said, the market is going to focus on, are there any mistakes in the distribution? Are the companies telling us that they're ready to start inoculating, but then there's a delay of 3 weeks or 4 weeks? Is there a problem with the actual distribution? In other words, going in and getting the folks whom you're going to inoculate. And then, are we going to see any side effects that we didn't hear from the companies besides a headache, a pain at the site of the jab? All of these are going to have an effect on a market that has moved up fast and furiously. Still in all, what we are expecting is that things will work out. Maybe not 100%, but they will work out. And what you're going to see is the broadening. They will include the small and mid-cap names because they have already been moving up. In fact, the small cap companies and the mid-cap companies were moving up before the announcement came from Pfizer on that Monday, when the market just went, absolutely euphoric. What was the backdrop for the small and mid-cap names to keep moving up? And when I say moving up, it was almost like miraculous because they were dormant for so long. I think it had to do with the idea that Biden would win the election and that the Democrats were going to win the Senate and keep the House of Representatives, a clean sweep. The reason behind that is the expectations were that the Biden team was going to come in with a very, very strong and heavy stimulus package, about $3 trillion worth, which of course would have helped the economy and helped the small and mid-cap names. And then, and this is what's I think fascinating, because when you watch the markets this way, on the night of the election, you may have remembered that, I want to say that 9 o'clock on the election night, the betting sites were coming in and switching. Suddenly, the betting sites were coming in and saying, Trump is going to win. He's going to win, not Biden. And what happened right then and there, I remember we're in the futures market, which is a market that works when we're all not, trading or we're closed. Suddenly, what we saw happen was the Russell 2000, which is the small and mid-cap names, American companies, pulls back down. And suddenly, the NASDAQ tech and biotech start moving up. They gave up. It's like, oh my goodness, we're not going to have this stimulus package because he's not going to win. But technology will be good. And then the next morning, this is how it changed. It was, no, now it is for Biden. But Biden did not win the Senate. And when he did not win the Senate, the Democrats didn't win, the small and mid-cap names pulled back. However, the announcement over the vaccines just put an underpinning under the small and mid-cap. They are still climbing higher. Yeah, there will be pullbacks when it gets too frothy, but they have some ways to go because, again, they have been dormant for some time. And the economy, as it normalizes, is going to help those companies. Also being helped when the market and when the economy starts to normalize will be the companies that we look at, Disney, for example. I just use that as my bellwether because Disney, to me, as a bellwether name, is the consummate consumer company because it owns 80% of ESPN. And we know ESPN needs advertising, but it also needs teams out there and it needs people screaming live, right? A normal economy, a normal world is going to help them. Not to mention the theme parks, not to mention the cruises, and not to mention their movie studio. Their streaming is doing very, very well. But the market looks at them and says, as things normalize, you're going to see them coming back to life. So that's one. Needless to say, the airlines, the hotels, the casinos. People are almost terrified of the thought, is it possible after all these months that we will put our families on a plane, head out to do stuff that we wanted to do, but we canceled back in the spring? The answer is yes, we are going to be doing those things. So we'll watch to see whether or not we start to see those extreme consumer names pick up and not just a one-day wonder and then it disappears, because that means it's traders going in and then getting right the heck out. The other thing that's important here too are some other things that we look at, and this has been important because the industrial names. If you look at ETFs, you look at the XLI, just to give you an example. Before this corona wave, this current wave in Europe and now in the U.S., as I said, the global economy was healing. The industrial names started to move higher. They're not going away, folks. They are going to start moving higher again. And I think that as soon as we see caseloads coming down in the U.S., people will have a sense that we are going to end this corona wave. But certainly if I'm looking over 3 or 4 months, I am going to say that life is going to be more normal and the companies are going to be in demand, not just here in the U.S., by the way, but in terms of exports, because also at the same time, the U.S. dollar is weakening in a good way, by the way, and that helps our exports. So the XLI, I'm just using that because that's one that I look at still, but the Dow Jones Industrial Average has so many of our greatest industrial names. The other thing I'm looking at, by the way, is I look at Caterpillar. I look at it, not that I'm telling you to invest in it, but again, one of my bellwethers. Why? Because Caterpillar is a window on infrastructure spending globally. And that, again, was picking up before this latest COVID wave hit us. Keep your eye on that because we look at it as our bellwether. Then there is another group, and this is the semiconductors. I want to talk about them now because they've been on fire. Even as the market was down yesterday, the semiconductors were up. I was doing a call for Barron's. I did a podcast for them in the morning. And, it's very hard to say that they were up, and I didn't look. I was thinking, oh, my goodness, because folks on the call would always go and look to see if I made a mistake, and thank goodness they were up. So is Disney, by the way. But the semiconductors are fascinating. They are the infrastructure. They are the semiconductors, the chips of everything that we do in the digital world we increasingly live in. So whether I'm talking about 5G, and you'll see Marvell Technologies. If I talk about gaming, it's NVIDIA. NVIDIA is also involved in data centers. They are involved, by the way, if you're into Bitcoin, they are the ones that are active in mining for Bitcoin. And then I could go on and on and on. So for those, I always look at the Philadelphia Semiconductor Index, the SOX, S-O-X. Why are they important? Because not only are they in everything that we do more and more, but they are also a bellwether of growth. And I can tell you that when they are down, and the overall market is up, you will hear some of the smartest technicians, some of the smartest analysts say, what's going on with those guys? This is not good. You don't want to see them down as a group and the rest of the market is up, because they tell you a story. In fact, they are akin to the transport names in the Dow Jones Industrial Average, because everyone knows when the Dow is up, we want to see the transports confirm it. And guess what? They're confirming it. So let's move over to the Dow for a second. You take a look at railroad shipments, up, trucking surveys, up, and airline freight logistics, up. That would be FedEx and United Parcel Service. So we have the underpinning in the market, but the underpinning in these very important bellwethers telling us it's okay. But again, it's getting frothy and we want to be careful. Also the financials. I want to mention the financials if you don't mind. Take a look at the KRE. Those are the regional banks. And then there is the XLF, which are the big money center banks and the big insurance companies. They are going to do well when the economy picks up and when the market believes the economy is going to pick up. For a variety of reasons. The regional banks do well when the local economies are going to do well, and certainly the small and mid-cap names are telling us that investors, and by the way, long-term investors, are coming in and building their positions in the small and mid-cap names because they do believe the U.S. economy is going to be filling in where they've been, pockets of disaster because of COVID. And so those banks should do well. Now, I wouldn't get crazy about them right now. They have had a huge move, but I'm going to keep my eye on them because I think they're going to participate even more as the economy really starts turning the corner. Then I want to mention something else, and that is emerging markets. The reason I'm mentioning emerging markets is this. The U.S. dollar is down a bit. We expect it to pull back a bit. We don't expect it to collapse. But the reason a weaker U.S. dollar vis-a-vis the basket of currencies we trade against is helpful for emerging markets is that many of them have U.S. dollar denominated debt, either corporate debt or sovereign debt, their government's debt. When the dollar is weaker, it helps them service that debt. So that's one thing a good portion of the emerging markets need. And then also they need a China that is strong for their supply chains. They represent major supply chains for China. And we are seeing already that they are doing well. Many of them have been hit by COVID, not as bad as the U.S. and Europe, but we want to keep our eye on that too. I really believe in active management for emerging markets. But you know what? They have a position in your portfolio. if you don't like the idea of it, no problem, because my view is you can do very well riding the good wave, the good, healthy wave to the other side of the pandemic. Now, I did say I wanted to go over the portfolios that people have. It's called the vaccine portfolios. So I wouldn't say right now, I know Moderna is up like dramatically, but I'm also starting to see short interest building in it, meaning they're betting against the ability of their share price to keep going up. But nonetheless, biotech names either in the small cap space, mid cap space is still very attractive. They're working towards therapeutics, and many are still working towards that vaccine. They may be in phase 2 trials, which is just before, obviously, the phase 3 trials. And then here's one I think is very interesting, and it's Corning. And I'm just telling you a story now of everything that is going into it. Corning in upstate New York and their other manufacturing sites, they've got the vials. They're working on producing those vials, and there will be millions and millions of those vials. So that's one area that people are looking at. And then I mentioned that Pfizer is working on its own, by and large, for distributing it. I don't know the name of the company, but I know that people are trying to find out who's providing the dry ice. That's a really interesting one to invest in. So good luck if you can find that. But the other thing is that McKesson is a medical supply company. They've got a contract with the U.S. government to help with the distribution. So most of the biotech companies that are going to have the vaccine, again, Moderna will be one, they're working with the U.S. government. So McKesson is one of the big names in that group of the companies that have an agreement with the government. People are looking at FedEx. FedEx, well known for transports of vaccines. So they have actually a routes. They've got supply chains all across the country. And the reason is they worked with the government when we had another epidemic in swine flu. So they're working there. And then also United Parcel Service. I hope United Parcel Service does a good job, because half the time when something's supposed to come to me, it goes to a neighbor and another farm, and I don't get it for like another 3 weeks until the folks come back. So I hope they do a really good job. Then there's Walgreens and there's CVS, because they are working with the government for to have people come in and get the jabs. So that is part of that whole supply chain of the companies that are actually working with it. So one thing that I found fascinating is Amazon came out the other day. You may have watched this, and they said, we're getting into the healthcare, pharmaceutical business, but you may have seen that Walgreens, just their share price came down. CVS, the share price came down. Remember, those were the algorithms initially just hitting those names. Well, guess what? Amazon, I do not believe, is going to be giving the vaccines. Okay, unless the guy who drives Prime, is also going to be giving vaccines. It was a nice time to come in and go into those names, because they got jabbed, something awful. So again, the market is looking for all of this. Now, I do want to mention, besides the possibility that they don't get emergency authorization, there's always a risk there, and the distribution is sloppy, and the market covers every aspect of it. It doesn't go well. We have another area where we have to worry. This is January 5th, folks. January 5th. This is when the 2 elections, the runoff elections in Georgia for Senate, are extremely important. Extremely important. Why? Because that will determine the leadership in the Senate. The market has had, as you can see, no problem whatsoever with Biden in the White House and the Republicans in charge. And why would that be? Well, how about the market, such as the market is, doesn't want that agenda from the left wing of the Democratic Party. That's the reason. And you may have noticed that the president-elect's team, no one who has been announced fits into that left wing, that progressive arm of the Democratic Party. I'm not suggesting they're conservative Republicans either, but they tend to be more of the middle of the road in terms of the Democratic Party. The market is very pleased with that. However, here's something interesting. Already there is conspiracy theories over the following, that really Biden does not want the Democrats to basically have the Senate. Why would that be, according to the conspiracy theories? Because he doesn't want the left wing of his party to have a say. Because remember, there will be an election, 2024. And we know from this election that the Americans basically said, look, okay, we want you, Biden, but we don't want those people on the left wing of the party. We see it because the Democrats they lost seats in the House of Representatives, and they didn't do that well, by the way, in the Senate. Then there's another rumor, and that rumor is that the President Trump, wants them to win. And why would he want them to win and get the Senate? So that the taxes go up, capital gains taxes go up, regulations start coming back, the ones that will strangle the small and mid-sized business owners, who, by the way, are already saying that they are worried about that. And then it sets the stage for a Republican to come back in for 2024. So there you go. It's already starting. Keep your eye on it. And I do want to mention this. If the Democrats take those seats, the market is going to sell off. It'll be an initial sell-off. I would take advantage of that, because you have to understand, not every Democratic senator is going to vote for some of those left-wing ideas. They're just not, because they know they'll never win again. So it doesn't mean that the Democrats are going to get their way, the left-wing Democrats. They will not get their way on everything. So anyway, that's where we are, but I just want to end with this. And this is important. If the market sells off, we're going to get some froth out. We're getting into a period in the market towards the end of December, January, statistically very good times for the market. But if we hit, those little detours along the way, don't get panicky, because at the end of the day, you've got the Federal Reserve still doing whatever it can do, whatever it takes to cushion the economy. It's very difficult to go in and get scared and sell everything, because all it takes is one comment from the head of the Federal Reserve and the market is back in business. And you're sitting there in cash and wondering when to get in there. More and more that we have seen over the years is central banks come in and protect. They don't want to see huge unemployment. They will come in and do whatever it takes to underpin the financial infrastructure. And governments also prepare to come in. They don't want the market to go in and clean everything out of fear and so on. Now, there's a lot of criticism, by the way, a lot of criticism. It says, how come you don't let the market do its job? Why do we have to be bailed out all the time? It's going to cost us a fortune in the public deficit. Why? And the reason is that whether it's a Republican administration or a Democratic administration, they do not want to see the damage that could come from standing by and letting the market do its job. So again, remember what I said. We trade and invest in the market we have, not the one we want. We're also watching gold, GLD, starting to base and starting to move higher. People are wondering, how is that possible? It's possible because what we expect is the dollar, again, to continue to weaken. And we also expect, now this is the good news about the economy, we also expect the economy to start to climb higher as we pull out of this COVID wave, and especially as we start getting vaccinated and life becomes more normal. Why would gold move higher then? Because gold has many narratives One is inflation. So if the dollar is weak, that also tends to feed into inflation. Gold would get a bid. We're seeing gold and copper doing well. That's what we're witnessing. And copper, being an industrial metal, has continued to show that there is industrial activity, most likely coming out of China, industrial demand for industrial metals. So there we are. I hope I provided you with some, what shall I say, hope that we are moving in the right direction, hope that we are going to get through this COVID phase. And what we have to watch are the caseloads. We've been looking at Europe because that gives us a glimpse of what will happen here. We're starting to see some of those cases coming down in the UK, and they're actually talking about Christmas, that maybe there will not be a lockdown then. So in the US, we expect to see, if it gets worse, regional lockdowns and very small restrictions put in place locally. And then there's all of us, folks who say, you know what, I don't really need to go out right now. I'll just wait it out. The longer we do that, the more the chance of, the initial unemployment claims rising. But we don't expect it to be horrible. We don't expect it to be as bad as it was in the first phase. So that's the good news. And the good news is the death rate, it's climbing, but it is nothing like what we saw in the Northeast, especially, that we saw in the spring. And that's thanks to, the doctors and nurses and medical technicians knowing what to do and learning from the first round, and also the therapeutics that we now know are very, very helpful. So again, thank you very much for being on the call. As we go into the holiday season, we just are so grateful for our fellowship with our clients, the advisors we work with, and for me personally with Carrie Short, who is on the call with us from Prudential. So from Prudential to all of you, thank you very, very much.
Thank you, Quincy. Do you have a few minutes for a few questions, or do you have to run?
No, I fixed dinner about 2 hours ago. I'm a 1950s housewife now.
So I don't think so, but I appreciate you sticking around.
No, it's true though.
So,
yeah.
So I have a quick question, but I just want to tell everyone on the call, if you put your mouse to the bottom of the screen, it says reactions, and you can either clap or give a thumbs up. And if you have a question, if you just want to hit reactions and I'll see it, and then we can get to you guys. Quincy, my question for you is, you mentioned the Fed a couple of times, and Dominic and I completely agree with you. I wish I had $1 every time I said the Fed's behavior during this pandemic has been spot on and really has been a lifesaver. But what makes me a little nervous tonight is, it seems to be a little back and forth between Jerome Powell, the Fed chief, and Steve Mnuchin, the Treasury Secretary, in terms of continuing to provide that liquidity. I keep reading Mnuchin saying there's other ways and better ways to use that money. And I'm just wondering if you have a thought there, what Mnuchin's reasoning is behind that, and do you see, most importantly, the Fed ending this liquidity anytime soon?
No, well, yeah, look, there is definitely this tug of war, in the market. A couple of tugs of war, push-pull. One is the short-term risks, right, the headlines, the worries over the economy, and then looking past this, the second quarter of 2021, when we expect to see things really turning the corner with the vaccinations. Look, you could argue that it is political. And folks, what happened was the Fed was given money. That money could be used for them to buy bonds. They were able to this was the first time that they were ever granted that permission to go out and buy bonds. So if they found that, for example, high yield bonds, which used to be called junk bonds, if that was freezing up, they had the money to go and buy it. So same thing with investment grade, same thing with money market funds. And they had that money. Mnuchin's, the Secretary of the Treasury's view was, hey, wait a minute, you guys didn't even use the money. So what's the problem? The problem is it's kind of one of those things that you want it as a backstop, and you want to know it's ready when you need it. There's an old expression in the market. There's never liquidity on the day that you actually need liquidity, right? Now, mind you, Mnuchin has said, well, the money is going to be there. You just need to ask Congress for it. So Janet Yellen would have to do that. So that's concerning. If we really do go off the deep end, that's the big question mark. The Fed has all along been saying, guys, things are worse than you imagine. And yet, we see the data coming in, and by and large, the data are still solid. I wouldn't say that the data are stellar the way they were pulling out of the downturn, but it's solid. It's not stalling. It may be slowing, but it's solid. So that's his view. Now, I do want to point something out, too. Biden is saying that he's going to come out using, authorization, not going through Congress, and he is going to come out with a big stimulus package as soon as they get in. So that is also going to be helpful. You saw today a $1 trillion package, which is, I know it sounds crazy, but it's nothing. The Democrats have said we want $3 trillion. Initially, the Republicans said $500 billion. Then they came to $1 trillion. So they came out and said, this is what we have. And Mitch McConnell is saying, not going to happen. So this is what you have. And this is, I don't know anything else to say. This is why Americans despise Washington, D.C. They have no respect for the politicians. And this is the reason. This is a reason. So in any case, there is this tug of war that is going on. But I do think that when you get the headlines from the Biden team, that they are working on a stimulus package that they believe they can get through without Senate approval, I think you're probably going to see that, which the market is absorbing, by the way.
Thank you. I appreciate that. Dom, did you want to have a question for Quincy?
Quincy, if you don't mind, you've already addressed a couple of times the unemployment numbers, and it definitely seems like the job creation, the economy opening up is starting to be offset by the job losses. Businesses simply can't hold on anymore, and some businesses have had to close because parts of the country are starting to close again. And then we're seeing, 12 million people coming off the unemployment rolls at the end of this month. So job creation, job losses, consumer confidence is probably the thing that worries me the most. And that's not something I see getting fixed in the short run.
That's a great question. Obviously, it's important because if you think that you are vulnerable and you could lose your job, you're not going to go out and spend very much. The good news is, I'm going to just point this out, 68% of our economy comes from consumer spending, right? Manufacturing, which is still pretty solid, it's slowing a bit, but it's still solid, is about 11%. So here's some good news on the consumer. One, we saw the spending, it was online spending on Thanksgiving. I think it was about $5 billion. I think I have it in my commentary. I didn't have a chance to get this in because it was going through compliance, but we saw Friday, which was Black Friday, again online, $9 billion. And I think yesterday, I want to say it was double-digit billion. The Federation of National Retailers believe that this holiday season, we will see more spending than we saw in 2019, which says a lot. The other thing is, now this may sound like it doesn't matter, but you know what? Believe it or not, it actually every year works out. So some of the top consultants whom we work with for very specialized economic and monetary data, every year come out with their Christmas tree survey. And it's already off the charts. And don't ask me to explain the psychology behind it, but it gives you a picture of the underlying consumer confidence in the economy. Christmas tree spending has started, and it is off the charts. Is that amazing?
Never discount the American consumer's ability to spend. You can pretty much count on that every year.
Exactly. So that's the good news. The bad news is, again, if this gets worse, and we just don't know. We just don't know if it's going to get worse. I don't know. You know what? The virus is the only one that knows. And that's the horrible part. The virus is still in charge. But guess what, folks? Not after 2021 when we start jabbing. The virus is going to be put to bed. Will there be mutations? Yes. But the fact of the matter is, we'll be able to deal with it much better once America is vaccinated. Good news on that. In order for us to actually go to Disney with our families and not worry about it, we need to have 70% of the U.S. Inoculated to give us what we call herd immunity. Right now, and it's gone up, so this is the good news, 58% of Americans saying that they will be vaccinated. This is up from 50%. There is a headline out tonight that says that medical workers don't want to be, a good portion don't want to be vaccinated. They believe that it has been rushed through. So that is not a good headline. But I think what you are going to see are many medical workers on, the internet, on TV, showing that they're being vaccinated to give people confidence. That's where we are. But I have to say, there is light at the end of the tunnel, and the tunnel is getting shorter. And the market sees it. And the market, believe it or not, is usually correct. The market knows that we are going to see the economy expand, and therefore the broadening of the market will continue to expand as the vaccine events develop. So that's where we are. Certainly a lot better than we were a couple of months ago.
So if you have time, I'm not going to get to all of them, Quincy, but could we try to get into two questions from our audience?
Yes, please.
Marcy, did you have a question?
You mentioned, I took a note before, you mentioned that to take advantage as people start selling off, the Republicans may start selling off to take their gains. When you said to take that into consideration, did you mean for us when things go down to buy into it when it's low?
Yeah, because, so what I said, just to give you an example, if it turns out that the Democrats win the 2 seats in Georgia, now if you're a Democrat, you'll like it. I'm just talking about from the market perspective. I can imagine that the market could sell off. And why? Because remember, the algorithms that I talked about, the high frequency trading, that's this artificial intelligence, they're very smart. They get the headlines right away. They will push the market down, I believe, if the Democrats take those 2 seats. I would take advantage of that because, again, in reality, just because the Democrats would have the 2 seats, it would mean that we would be equal, and it would also mean that Kamala Harris would be able to have the vote. So remember, when there's when it's equal, she could break the vote. But not every Democrat who's a senator is going to say, "Oh yes, I definitely want to see taxes go up dramatically," or "I definitely want to see the public option bring in universal health care." They're not going to do it because many come from pretty moderate states. So I would take advantage of it because here's something we always say about the market. The sell-off will always be deeper than reality. Just like when the market goes way, way up, you know that you got to come pull it back, breathe, take a pause, take a breather, burn off some of that froth. So I would take advantage of it. It's hard to do because it's scary. I'm just telling you that it's scary. That's the way it is. But it's the market just getting crazy and jittery and nervous.
Okay, great. Thank you.
Thank you, everyone, and have a wonderful holiday season. And you know what? Next year at this time, I think life is going to look a lot more normal.
Well, we certainly hope
Well-
so, and we certainly appreciate your words of wisdom and your calming presentation.
Thank you so
Well,
much,
thank you
Quincy.
so much.
Well done.
Thank you so much. Thanks very much, guys. And thank you,
Happy
Carrie.
holidays.
Thanks.
Happy holidays,
too.
everybody.
Thank you. Happy holidays.
Bye.
Michael, thank you
Thank
for the
you.
invite.
You're
I
welcome, Betty.
appreciate
Be well.
You
Good
too.
night, all. Thank you for joining us.
Good night. Thanks,
Thank you.
Carrie.
You got it, Michael. Have a good night.
Thank you,
Tom.
Michael. Thank you,
Bye.
Dom. Thanks, Carrie.